fundsupermart.com.
The First Eagle Amundi Income Builder is a relatively new fund on our platform. Can you briefly describe its strategy and how investors can expect it to be different from other global balanced funds?
Well, the First Eagle Amundi Income Builder Fund is conceived as a core long-term wealth management solution. It has a dual objective. First of all, of course, like all our First Eagle wealth management solutions, we seek to minimize the risk of capital loss. But its secondary goals are actually to both provide a meaningful level of current income while protecting the purchasing power of the income stream over the long term. To achieve this goal, we as First Eagle, as value investors, continue to believe in the value of margin of safety, which means that we will primarily invest in equity, dividend-paying equities, of course, in credit, both high yield, investment grade, also in government bonds, if necessary, but only if we can identify, from a bottom-up perspective, a margin of safety. Because again, the margin of safety is going to be the key element to help us in an uncertain world to minimize the risk of capital loss. Actually, the First Eagle Amundi Income Builder Fund is quite an innovative solution because it is the only global mixed asset fund in the world where the entire portfolio structure is due to a bottom-up stock picking approach, where most other funds are either pure top-down or a mix of top-down and bottom-up. Also, the way we generate income is quite innovative. Because we are not in an income-chasing type of environment. Most other income funds have either a target income they seek to obtain every year, or they just seek to maximize the income level over the short term. At First Eagle, what we seek to do is to chase margin of safety. It means that the income level we are going to be providing is going to be a pure result of the margin of safety opportunities we've been able to identify from a bottom-up stock perspective.
Is there a targeted level of income on the fund's portfolio? If so, how does the fund select securities in its portfolio construction?
Well, we believe that with our bottom-up stock picking approach, focusing on margin of safety, throughout a cycle, we should be able to generate at least 3% in income, both coupon and dividends, and up to 7%. Because of this innovative feature, we have decided to provide a fixed income payout of around 5% every year. Of course, as I mentioned, we are not seeking to generate 5% every year. We seek to find margin of safety. But with a minimum and maximum around 3 to 7% income, we think that over time, our average income that we are generating should be very close to 5%. Therefore, not using capital in average to pay out the distribution. Again, I think this is very interesting because rather than chasing short-term yields, which can provide also a source of risk, we focus a lot on avoiding losing money, which means that for short term, sometimes we might lag because we're less sexy, but over the time, by remaining very disciplined at what price we're willing to pay, what risk we're willing to take, we should be able to avoid capital loss as much as we can and therefore provide attractive risk-adjusted returns.
What is the top holding in the fund's portfolio currently, and what are the reasons behind this allocation?
One of the current top holdings is actually a company from the region here. It's Mandarin Oriental, the luxury hotel chain. The company had some pressure last year due to Hong Kong occupancy and also due to rising fears that the slowdown in the Chinese economy could trigger a slowdown in the tourism boom in the region. Therefore, the stock price came a bit under pressure. For us, it was very interesting because it allowed us to buy this company at a very interesting discount. Because what makes Mandarin Oriental quite interesting, besides a strong brand, a good management, a sound balance sheet, is that this company owns a big chunk of the real estate where they operate in their hotel business. And when you look at the balance sheet, you will figure out that these real estates are actually priced at purchasing cost or construction cost. But many of these hotels were constructed 20, 30, 40 years ago. So that the current market value of the real estate is actually much, much higher than what you can find on the balance sheet. And therefore we were able to find quite a high level of margin of safety due to this uniqueness of owning the hotels, the buildings where the hotels are operating inside. And Man is providing a 4% dividend yield, therefore nicely contributing to the dividend distribution in the income fund.
Thank you.